John, you made one of the most famous investments in Wall Street history. Over a period of time, you put a short on, in effect, to make it simple, on the mortgage market around 2007 or so. And that trade, it is reported, made roughly $20 billion or so for you and your investors. Nobody has reported anything more profitable than that in the Wall Street, I'd say, last couple of decades or so in one trade. Did you have any doubt that that trade was going to work?
Well, we were pretty convinced that the mortgage market, segments of the mortgage market were overvalued and were likely to implode. So we took a very concentrated position in these securities, and what we expected to happen happened.
The bad years, the crisis years, the Dow dropped by about 50%. And since then it's, and people panicked and got out, of course. Even in the mutual fund business, and particularly in the ETF business, a lot of net liquidations at the lows. And now we're back. I think the gain from that level is maybe 200%. So it shows you that when you act on the emotions of the marketplace, you're making a big mistake. I stay, and always have said, stay the course. Don't let these changes in the market, even a big one, that was a 50% decline, don't let that change your mind. And never, never, never be in or out of the market. Always be in at a certain level, you may want to be 50% in the stocks like I am. You may want to be 75% or 25%. That's probably a decent range. But never be out and think you can get back in, because your emotions will defeat you totally. Buy and hold for a stock is one thing. Buy and hold the U.S. stock market is quite a different one. What do we have going for us in the U.S. stock market? Leaving aside how hard it is to pick the winners, how few people really ever heard of Amazon 25 years ago, to say nothing of Google, maybe a little more than that, maybe 30 years ago. So if you hold the stock market, you will, not to be corny, Bill, but you will grow with America.
And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776.
Which is, to be successful as an investor, you have to bet against the consensus and be right. First of all, why? Why can't we just buy stocks we think are
the consensus is built into the price. So because the consensus is built to the price, and assets price themselves in a way that they all compete and they're all of equal value in certain sense. There's risk premium of equities over cash, and bonds will have that over whatever, but it's basically they're all priced that way. It's like, think of it as going to betting on a sports team, or in other words, a horse racing. Okay, so there's handicapping that's going on. So in order to be successful, you're betting against the consensus and you have to be right.
Which are you? Someone hold on to the market comes to your knowledge and wisdom, or just get out when it's going against you?
All right, so first of all, the market is rarely dead wrong. And the history books are littered with people who are smarter than the market, who've lost all their money. So when you're in an investment and it's not working out, you really need to take a step back. What don't I understand in this situation?
I think the great thing about my original mentor, Spiros Drelis in Pittsburgh, was he made me focus on what moves the stock price. Like, you can't just say, Stan, okay, this is a great company and the earnings are great. He said, tell me how people are going to think differently in 18 or 24 months about the situation than they're thinking now. That would be my number one advice to the young people. Do not invest in the present. The present is not what moves stock prices. Change moves them. And I want you to try and envision a different world in a year and a half from now, and where these security prices would trade versus now, given the world you envision. That would be my number one advice to a young person getting in the business.